Welcome, we got the real deal today, and it's going to be, what do you do? How do you avoid getting your stop run by the algos? Whether you've made the bottom wick when you're long, whether you've made the top wick when you're short, everybody's been there at some point where it happens to you. And you feel like, oh, how could it be possible? Why me? You know, what am I supposed to do? I had everything perfect, but the gods conspired against me, or the market conspired against me. So first off, like, what are we even talking about here? Like, not every single trade where you say, I'm going long in front of X, I'm going short in front of Y, is going to work out perfectly. So I'll just give you an example of what it looks like when the most obvious level holds, because this is Rivian here at the morning. 15 is the bottom. It never breaches 15. That low is 1501. That's 15 even. The opening range top is 1534. It never breaches the top. So you're trading inside of the range. Hey, no problem. That's really easy. You're long in front of 15. You set a stop, and it works for you because it never actually breaks a level. But you know the market's not that simple. The reality about the way trading goes is oftentimes at the more obvious levels, you're going to see a little bit of shenanigans. And what I mean by that is you'll find turns at those same levels right after everybody's stop, or a lot of stops get run. So I'm going to give you an example of what that looks like, because it kind of happened to me today. And if you look at the same sort of idea here in reverse, here's Intel. In the morning, it initially flushes. You see it consolidate. The pre-market low turns into a resistance level right just above 42.40. So as it's coming back in to retest that, looks like a pretty good short there. But what happens when it runs that obvious stop or breaks that obvious stop? That's the top of the move. And then it pulls back in and goes back. Now, if you're trying, like I am in a situation like that, to short that level to get to VWAP, nice little scalp trade, well, there's almost no way for you to win if your stop is at that level. So how do you combat when you have a good level or an area where a stock is likely to turn, and in fact does turn, but you aren't able to capture it? So there's two things that you can do, one of which I said live in the morning as this was, or right after it happened. And that is to risk it down. So the first way you can get around this in this situation is to think about, well, if I like the position underneath that level, instead of having a stop right at that high, let me risk half, give it a little bit more room above. So if you're risking, in this case, 10 cents, be willing to risk 20 cents on half the shares. And then if it breaks that high and comes back down, save that other half for an entry on the way back down with the tight stop after it's broken the level. That way, if it works right away, you have something on board. If it runs that stop, you're not adding to it until it proves it's a false breakout. Then you're with the same short you would have had anyways in the first place, but it's run some stops. Now, what's the advantage of that? If those stops are run, what's happening here? Some people that are short are out, meaning on the way back to VWAP, less people on the bid having to cover, so it'll fall a little bit easier. The other thing that's happened is anybody looking for that continuation of the bounce long is trapped long, which is again good for a short-term short. So one of the things you can do on initial position, take half, give a little bit more room. That way your risk on the initial position is exactly what it would have been if you take a full position. Do not get the other half unless it does the false break of your key level without taking out your stop. So that's one thing you can do. The other, of course, and sort of obvious way to deal with this is to not take anything until it gives you the false break. That can be trickier, because one thing about the false breakout, it gets back underneath that price very, very quickly. And when that happens, you can end up missing the position. I do favor having something on board. That way, if you cannot actually get into position on the way back through, you've already taken it. So it's all about the mechanics of how you want to deal with that kind of position. Taking half, I think, is a pretty reasonable way to do it. Of course, waiting for the false break is equally reasonable. There's no perfect way to do it on a stock like that. Now, I want to give you something else here, because it's not necessarily, always going to be the most clean every single time But there is something that you should consider for these wick tops, and where running stops can be a little bit obvious. And that is when you are long, or when you're going short in front of, or going long in front of overhead resistance, or going short in front of support. So I'm going to give an example here where you might look for a place where a lot of people would stop out, like a 17 level, and then find a reason why you could be anticipating stops running and then a bit of a turn. Like, why would somebody want to run stops, i.e. trigger a bunch of people, take positions short above that trigger level, and then have it come back in? One of the most obvious places for that is if that stop level is not the real resistance level. And an example like Snapchat today, that is the case. $17 feels like a reasonably good stop level. The first time, it pulls back a little bit. The second time it breaks and then stops out in front of this line. Well, what the heck? Why do you have a line in the middle of nowhere? Did you know it was going to be the top? Not really. But I'll go to a different time frame, show you a daily chart up here on Snapchat where you might start to get the idea. And then you go to the 15-minute and pull it back. And then you realize, oh, wait a minute. This has been breaking and failing above 17. So this is a situation where you can anticipate that stops might run at that even dollar level because you've got overhead resistance. Now in this case, that's where you don't think about that half and half notion. Why even have short at 97, 98, 99? In that particular case, you should wait for it to break the 17. Let everyone be trying to go long as it's breaking the high on the week while you're waiting for it to test this level up here in the teens. When it doesn't get through that, there's your false break, there's your stops being run on the even, and that is your retracement entry. So you trapped longs above 17, you've got people that were shorting it and underneath 17 stopped out, and you have an entry off a resistance level that held 2 weeks ago. When in doubt, zoom out. It's always your friend to know where there has been support and resistance on the higher time frame. What is the big money doing? You want to avoid those rinse jobs. And the time when you're going to see them happen the most violently, almost without question, is going to be the open. This is the thing about trading at 9:30. It is a huge, and I mean absolutely huge, liquidity event. So I'm going to give you the most extreme example you're going to be able to find of it for Meta. There's on earnings, they were up double digits. It was an absolute blowout for them. But at the open, there was the bamboozlement underneath the pre-market lows. You saw it make a fresh low, then you saw it go $30 to the upside. Well, how do you capture that move? Now, obviously, this is a red candle at the open. That is a lot of selling on high volume for $10. But once again, what do you see when it gets to either the pre-market low here, 56, which it runs underneath twice, or specifically at 55? Pre-market lows, even dollar levels like 455, those are obvious levels to transact at. If you are a day trader, it is imperative that if you are trading an in-play name like Meta, you cannot be in a situation where if I'm taking this at the open, I'm just going to stop out if it breaks 55 or 56. You've got to have some other risk parameter because the even dollar stop at 9:30 is going to get run. So if you don't want to get run at the open by the algos, you have to have some other area that you're going to get out. In this particular case, it could just be saying size down, risk $3 or $4 instead of 1 or 2. That's an option. Or when the pre-market low sits here at 54, instead of saying, okay, 55, 56, it has to break the next level underneath that pre-market bottom. Got to break the next even dollar down. The other way to go about it is like what I was talking about with allowing stops to run. Maybe you don't have to be on the front end of this trade. Maybe be willing not to catch that dip to try to catch it on the way back up. Because once this runs the pre-market lows, do you see a red candle? Because I know I don't see a red candle after that. It runs those pre-market lows. Even if you get it on the way back through, you've got an entry breaking back above. You can see that it wicked that double bottom twice, that early double bottom twice. That sets you an out there at 54. You could be long at 56, 57, or 58. A couple of dollars worth of risk on a stock that was gapped up 60 bucks. So it's a reasonable risk to reward. But the willingness to sit it out until it's run those stops at the bottom and snatch it back on the way up is a phrase I like to use all the time because a great trader once told it to me years and years ago. Be willing to miss the trade to make the trade. Nobody cares if you got a great entry if you couldn't hold it and it stopped you out. It would be more important to have taken some position somewhere that you could have held for the move than to have gotten the best price and got rinsed at the bottom. At the end of the day, it only matters whether you're able to profit from it. And sometimes that means allowing the stops to get run, having a plan of action to get it on the way back through. That's especially important on earnings plays, especially important at the open, especially important when there's flash news. So hopefully you can avoid the algos running your stops and find a way to stay in those trades or enter them when everyone else just got bamboozled. That's the real deal. And let's make sure we don't have the algos take our money every single day. Profit from them. It's a heck of a lot better.